Hello, this is Matthew Rees, Portfolio Manager at Columbia Threadneedle Investments and Deputy Manager on the Embark Horizon range of portfolios. We're delighted to be part of the strategy together with Embark and eValue. Today, I will look back over Q2 of the year, as well as our outlook for the future and what this means for our positions taken relative to the strategic asset allocation set by eValue. Equities and corporate bonds rebounded powerfully during the quarter, outperforming safer haven assets like government bonds as the COVID-19 pandemic appeared to be slowing across much of the developed world and lockdown restrictions were easing. Additionally, risk assets also benefit from stimulus on both monetary and fiscal fronts. The bond purchase programs deployed by the Bank of England and the ECB were expanded, while the Federal Reserve and BOJ announced increased loan schemes. In June, investors welcomed news the White House was weighing up a $1 trillion US infrastructure package, and the European Union was looking to launch a €750 billion recovery fund. Now, this recovery fund could very well prove to be the first step on a journey towards a common fiscal union and debt mutualisation across the Eurozone. Debt is planned to be guaranteed by the EU budget and should be a long-term benefit for the euro and the region, as having a monetary union without a fiscal union has caused great strains in the past. Within our tactical asset allocation overlay, we have continued to favour equities and corporate bonds, whilst remaining neutral on cash and property and a dislike for government bonds. We have been encouraged by the declining COVID infection rates and the support markets and economies have been given. Activity indicators such as PMIs and mobility data suggest economies have started to open up again. Now, market price interest rates remain at very low levels for the next 5 years, in line with our expectations of rates remaining low for a long time, amidst sluggish growth rates and below target inflation as spare capacity remains in economies. The strong rally we've seen within equities has led us to top slice positions in order to maintain our overweight. We continue to favour Asian and US equities currently. Now, we raised the US equities to favour on April the 21st, and this was on a view that the US had a number of strong global companies that can thrive in the current environment. Think Amazon, Google, Facebook. These quality growth companies, we believe, can continue to compound earnings and make the US market an attractive region to overweight. In Asia, emerging markets, we gain some selective cyclical exposure via a region that should emerge from the pandemic quicker than Europe and the US. Now, post end of quarter, we also downgraded UK equity. Economically, the UK is a large service sector compared to other regions, and we think the UK could be left behind in terms of GDP growth. And Brexit is still a concern too for the UK, and it will come into great focus as the end of the year approaches. We have been positive on the outlook for corporate credit since 24th of March and moved to strongly favour on the 14th of April, expecting a narrowing of spreads to occur after the snap wider in March and the large stimulus of central banks buying corporate bonds. More recently, we have turned positive on high yield as well. The big move in narrow has happened, but with high yield spreads still in the region of 500 basis points, the carry available is attractive. A great benefit of the Horizon range is the active nature of our management. As discussed, our active tactical asset allocation is a tried and tested process which has been run for over 20 years. And on this slide, I show the active positions we were running as at the end of the quarter. You can see generally we're underweight bonds and overweight equity. It is also useful to remember that we are also allocating to active asset specialist funds. And this has been a great benefit to performance year to date, as regional equity strategies such as Europe and the US have performed very well versus their respective benchmarks. Now, thank you very much for listening today. I look forward to future updates on the Embark Horizon range in coming quarters.